Good afternoon, everyone, and welcome to TBR's webcast, Public Cloud Leaders Evolve Portfolios and Business Models to Sustain Expansion, Insights from TBR's Public Cloud Benchmark, recapping performance as reported in the public cloud market landscape and cloud vendor profiles. My name is Allison Crawford, and I will be your host for today's webinar. Competition is high across the public cloud market as an increasing number of vendors invest in their portfolios and go-to-market strategies. To differentiate, applications vendors such as Salesforce.com and Google, as in Google Apps, are customizing their portfolios and building out public sector teams to support growth in the industry. The platform layer will determine the long-term success of software as a service and infrastructure as a service vendors. Vendors are expanding their developer ecosystems, and the race is on to see which vendor can attract and retain the most and the best developers. As cloud compute and storage becomes low-cost commodities, vendors improve portfolios and adjust pricing and go-to-market strategies to drive expansion. In the next 45 minutes, Senior Analyst Jillian Morandi and Principal Analyst Alan Kranz will walk you through the latest business model evolutions and vendor performance in the public cloud market, followed by Q&A of these results and how you should position in relation. Before I pass this over to Jill and Alan, there are a few logistics I'd like to cover. First, we're recording today's session and we'll be posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Jill and Alan will address them at the end of the presentation. Or if you'd like to set up a client inquiry for a private discussion, please reach out to any one of us at the end of the presentation to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And you'll get all these social media links again at the end of the presentation. Now let me introduce Jillian Morandi and Alan Kranz. Jillian is spearheading our public cloud research and is the lead author of this program. Alan has been covering and writing about the software market for over 7 years and is leading our research coverage in private hybrid cloud. Together, their strategic advice is helping several of the largest cloud vendors identify new opportunities and revenue streams. And with that, let me hand this over to Jill.
Thank you, Allison. I wanted to start off the presentation today with two graphs from our ongoing research. This graph is from our ongoing cloud customer research, and it shows the global adoption across public cloud, private cloud, hybrid cloud, and professional services. As you can see, public cloud continues to grow. Currently, around 40% of the enterprise market has adopted it. This is across the US, France, Germany, UK, China, and India. We expect this growth number to continue increasing and to get up to around 60 to 70% in 2016. The hybrid cloud, or the hybrid IT, is a very interesting bucket as well. This is a newer area of research for us, and we include any IT integration in this hybrid bucket. What we're seeing in the public cloud is a splitting of vendors to focus on either public cloud or private cloud for the most part, with the largest multi-line vendors like IBM focusing on both. Where we think the biggest opportunity is in hybrid, but vendors, instead of all flocking to the public cloud market like they did a few years ago, they're really going back to basics and using their core strengths to enable cloud, deliver cloud, or offer services around cloud to drive revenue from the cloud space as opposed to just offering cloud services. This graph is from our new market forecast series. So with this, we look at the 17 buckets of cloud out through 2018. For this, the SaaS market, it makes up the majority volume-wise and will continue to do so. The biggest vendors right now are horizontal front office suites and applications, so CRM, HRM, and analytics, and also closer to the box public cloud services such as ITSM are gaining traction. The market is today and will continue to be made up by the majority will be made up by larger vendors, but there will continue to be thousands of smaller vendors who are focused on industry or different smaller niche plays.
So one of the things that we're looking at with public cloud overall, and it starts on the previous slide, but then also has a number of implications here, is that the types of consumption use cases and adoption that drove the initial growth in public cloud are not the ones that are going to continue going forward, that there are more options to achieve the same type of outcome that ultimately customers want to get to, with private cloud options never being larger. You don't have to build your own. You can consume single-tenant services from a third-party service provider, be able to scale it up, scale it down, but also have the enhanced security and performance that those types of environments can provide over public cloud, as well as the increasing ability to consume public through the framework of a hybrid environment, where it's used for certain portions of workloads and can be connected and really optimized in terms of which services are delivered in which type of cloud environment. So although it looks like a fairly smooth trajectory in terms of the public cloud growth, one of the things that we're certainly calling out with the research, and you'll hear today, is that there's going to be a lot of changes in terms of the, both on the customer side as well as the vendor side, in terms of engaging an ecosystem, taking a more customized approach to public cloud solutions than we've seen really drive the early days of growth up through the end of this year.
Thanks, Alan. To dive a little deeper into the infrastructure as a service market, this market we see really consolidating. Today, it's dominated by Amazon Web Services with a lot of other new entrants. Some will succeed. We think by 2018, Amazon, Google, Microsoft, IBM, and regional players, Fujitsu, Orange, BT, will remain healthy and growing, that other vendors are starting to get out of this market. For the PaaS market, which is the smaller bar on the top, we see that layer continuing to make up a smaller portion of the overall market, but it really is that sticky layer, and the layer that vendors from both the SaaS and infrastructure side are investing in to drive developers and to drive application growth. Now, one of the reasons that this bar is small, it just depends on how the business model vendors have around it. Salesforce, for example, charges an ongoing fee for the use of Salesforce One Platform, which is Force.com and Heroku. So you can build apps and they're deployed right on Force.com, but you only pay for the platform. Whereas Amazon, it offers Elastic Beanstalk, which is their platform, free of charge, but the developers and the ISVs are charged for the compute and storage associated with those applications. Now we'll dive deeper into we'll look at the overall market and how it did in the quarter, and then go into the segments. So this first graph, this looks at, it's a snapshot of the 2Q14 public cloud market. The x-axis represents the absolute dollar growth year to year. The y-axis represents year-to-year percentage growth, and the size of the bubble is the volume of public cloud revenue generated just in the quarter. So we see there's three things I want to call out here. The first is that the leaders remain the same. Amazon, Salesforce, Microsoft, those were early-to-market vendors. They continue to push ahead, although they all generate over $1 billion a quarter just in public cloud revenue. As you can see here, they're still all growing with the average market or above and pulling away from the rest of the pack. Part of this is due to the ongoing investment and being early to the market, but some of it also has to do with the nature of cloud business and the subscription model. They're continuing to grow continuing to add customers, albeit they're throwing a lot of sales bodies and marketing dollars at public cloud. So generally, some of these companies are not turning a profit yet, but they continue to grow very nicely. The second thing I wanted to point out is the blue circle. So these are vendors that are moving into leadership positions. And they're all doing it from slightly different ways. IBM, they are a large, successful, traditional IT vendor. They want to be all things to all people. So unsurprisingly, they have a platform play, they have an infrastructure play. They're beginning to acquire applications and build out their applications portfolio. And they also play across all of the cloud segments. They've performed very well in our hybrid cloud research and private cloud research, and are beginning to move into leadership position in public cloud as well, where for a couple years they were lagging. So Google has had the assets, similar to Amazon, to offer public cloud for years. They're an internet company. They have a lot of data centers globally, and web services is their business. So based on opportunity a few years ago with the popularity of their Gmail product and the move to cloud, to really invest in their core cloud business. So they started with Google Apps, or what is now called Google for Work. They added they added Google App Engine, their platform, and more recently, their infrastructure as a service, Google Compute Engine. So they formalized their business. They have a consolidated team. They're not operating as product teams anymore. They've launched new campaigns. They've done marketing. They've grown their customer base, and they've really moved from the bottom left of this graph to their current position probably over the last year and a half. SAP, they're an applications vendor who saw Salesforce coming in and taking share in CRM, Workday taking share in HRM. So they've done a great job rising out of that traditional software space. Granted, the majority of their business is still there, but they really have come quite a long way in the last 2 years through cloud acquisitions and, again, operationalizing that cloud team to defend their customer base and win new customers. Workday and ServiceNow, these are born on the cloud companies, both started by executives who were from the traditional space, who had successful businesses. You have Dave Duffield and Anil Bhusari with PeopleSoft, who was acquired by Oracle, Start Workday. Fred Luddy, who ran Peregrine Systems, who was acquired by HP. And what these people saw is the huge opportunity for large legacy applications to be disrupted. So they took that idea, they ran with it, and Workday and ServiceNow, they've continued to do very well over the last few years, and I think growth and usage will continue to increase as they expand their portfolio as well as customize around different industries. The last point I want to make on this slide is around Oracle. So Oracle is in the position that Google, IBM, and SAP pre-acquisitions were in 2 years ago. While Oracle is later to the public cloud market, they have the same sort of operations and partnerships in place where they can very quickly invest in their cloud portfolio, release it to the different channels, and begin to grow that business. So we expect in a couple years, Oracle, we think they'll continue moving away from the pack and eventually be in that moving into the leadership position category. So these are the 3 trends that we've seen happening this year that will shape the market for the next couple years. In the SaaS category, the large horizontal players are investing in verticals. The PaaS section, everyone's investing in platform. People are attracting developers. They're increasing ease of use or improving ease of use. They're giving people different development options, opening APIs. really trying to make it as easy as possible for people to develop on their platform. They're doing that because the vendor winning the platform space will really win the cloud space by tying together all of those different applications and infrastructure, and they'll have a steady role within the enterprise. Lastly, the infrastructure as a service space. So this is the second cloud segment that's really started to mature after SaaS, but it's maturing in a different way. The two biggest trends here that are shaping it is that price competition is once again at the forefront. So we saw pricing as a huge adoption driver a few years ago. It went away to some extent over the last few years as people looked for SLAs and security integration. Now that the infrastructure market has caught up and has made investments in those areas, price is once again at the forefront. Secondly, many traditional now cloud vendors seem to be de-emphasizing their focus on public cloud infrastructure. This will drive a growing number of cooperative partnerships with Amazon, Google, and Microsoft with the broader IT market, really as all the vendors, again, try to carve out their piece of cloud and what serves their traditional business and their operating margins best. This slide depicts the 2Q14 public cloud software as a service revenue. The x-axis represents year-to-year corporate revenue growth, and the y-axis represents year-to-year public cloud SaaS revenue growth. So it's corporate growth versus SaaS growth. So the first thing I want to talk about is the pure plays. So the horizontal line, the solid blue line through the graph, that's where the pure plays sit. And even in a crowding, maturing market, these companies are still growing at a really nice clip at between 40 and 110%. So there is still a lot of growth here. I mean, Salesforce.com celebrated its 15th birthday recently, and they're still, right there, driving between 30 and 40% growth year to year. It is more of a predictable business model due to the ongoing subscriptions, but there's a lot more that goes into that. So we see a lot of customer success teams, we see portfolio diversification, cross-selling, upselling. So it is a much more diverse business model than win a customer and hope they renew. So how are these vendors going to keep on this line and keep growing? They're growing their teams. They're expanding their portfolios, increasing vertical focus, and really operationalizing and maturing themselves as the market matures. The second group I wanted to look at is the group that's circled in green, so SAP, Microsoft, and Google. These companies come from software and internet backgrounds and they kind of shot up that y-axis, and now that their cloud portfolios are becoming bigger, they're starting to go down, and I think eventually they'll be on that more of a pure play line as more and more applications transition over to cloud delivery. So the Google saw the opportunity and again has been investing in its operational team and tying its portfolio together, integrating the different tools. I think a huge thing for Google Apps or Google for Work is that they're improving integration with Microsoft. So they're no longer going to market against Microsoft, so wanting companies to rip and replace Microsoft Office and replace it with Google. They realize that's not really going to happen. Perhaps for startups and smaller companies, they can use Google Apps. But Google is really trying to work with Microsoft on that and maybe use Exchange for some things in Google Apps or Microsoft Excel and Gmail. There's a lot of different combinations that are popping up in enterprises. For Microsoft, we think they had an easier time than other traditional applications vendors because O365 upgrades, they're not just enterprise focused, but they're also consumer focused. So Microsoft was able to take a very well-known, widely used product, simplify it, put it in the cloud. It made sense for the enterprise and consumers to get that as their next version. Plus, they were more in tune with consumer demand, so it could really help develop their product to be more, not consumer focused, but add in some of those additional capabilities and ease of use and simple UI that some of the other vendors may not have been as familiar with. And lastly, SAP. They saw erosion with Salesforce and Workday. So they really stepped it up through acquisitions, ongoing investments, and going to market with a simple cloud message. So one of the biggest things that SaaS vendors are doing to differentiate is through industry customization and expertise. Now there's 3 different groups of vendors with 3 slightly different strategies. The first group in the green, they're large horizontal LOB-focused apps. Salesforce in April launched Salesforce Business Unit for Industries. So they're going to market with their new teams, they have new products, as well as they're attracting developers to develop industry-specific products on their platform. Viva is a good example of this. It's a healthcare-focused CRM. So when a customer comes to Salesforce and is in the healthcare space and wants those specific capabilities, they have a relationship with Viva, who's developed right on their platform to pass those customers on to them. Now, this is a new thing for Salesforce. Usually, they don't work as closely with partners, and they very rarely use partners as a sales channel. But as they grow vertically and expand expertise here, they can't do it all. So we think they're going to involve partners more and more. Google, it went to market. It did very well in the SMB space, the education space, the public sector. So they do have quite a good vertical focus today. And we think enterprise will be their next focus for apps, but then they'll start targeting different industries outside of the public sector. So similar with Microsoft. Strong education focus, strong public sector focus, and we think they'll take the learnings they've had there and expand into different verticals. Workday is interesting because they partner more closely with their customers to help develop solutions. So Workday released an education suite this year that they co-developed with Yale and Georgetown. So that group, they're horizontally focused and they're building out their industry expertise. But then we have SAP and Oracle. So these companies are coming at it from a different angle. They are extremely embedded in industry, have large, robust expert teams, and they're building out their cloud portfolios and then are going to leverage those teams as a channel into the enterprises. They'll have pre-populated content, they'll have their relationships, they'll have people that can add cloud to their portfolio they're already selling and that already is customized for the industry. And lastly, there's IBM. IBM is taking a different approach than both of these groups. So what they're doing, since they're closely partnered with SAP and Oracle, they don't really want to compete with them, but what they're doing is they're building out SaaS applications, a broad range. They have over 100 at this point that are specifically industry focused, so niche applications for different industries. In their most recent partnership with Apple, that happened a few weeks ago, again, they said they were going to build over 100 more SaaS applications specifically on iOS. So you can see the 3 different approaches coming from various areas of expertise, but all ultimately trying to do the same thing.
I think the other thing that's important to remember with IBM is that they are historically a non-applications company that, through the shift in cloud, have made a number of acquisitions that change that role and position in the market. And so but also at the same time, instead of looking to take a very industry-specific view in terms of the applications that they're providing and delivering, they've taken more of a persona view that goes across different verticals. So looking at the CMO as a key new buyer for IBM technology and cloud services, and the head of HR, again, as a persona that they're targeting to go outside of the IT realm and the infrastructure and middleware spaces that they really continue to have the biggest presence in. So it's not something that's vertical specific at this point. They're taking a similar approach of looking at horizontal platforms capabilities, a little bit of specialization by vertical, and so you'll see more of that as they build out around that niche cloud applications portfolio to take a very similar approach, but we don't see them getting into verticals as the same way that the SAPs and the Oracles of the world have, just because of their historic presence in terms of traditional applications.
The next segment we'll do a deeper dive into is platform as a service, and we'll look at the developer ecosystems. So on this slide, the y-axis represents year-to-year public cloud PaaS revenue growth, and the x-axis represents year-to-year public PaaS revenue absolute dollar growth, so similar to the first graph that we looked at. And what I wanted to highlight here is that the leaders on this slide, they have very different approaches, or they started out in very different ways around the platform space. Microsoft, they have enterprise developers, and they're attracting traditional Microsoft developers and partners to their platform. Salesforce, they attract developers and ISVs that largely want to go to Salesforce, not only because it's easy to use, so they do cater to the citizen developer, but a few years ago that wasn't the case. So we've seen that a lot of customers, they want to latch on to the Salesforce.com, the developers want to latch on to the Salesforce.com customer base. So a lot of the applications we see developed on Force.com today, they're either extensions of CRM, so ERP vendors or supply chain vendors, HR vendors, or they're industry-specific CRM vendors or marketing vendors that, again, latch on to the Salesforce customer base and act as natural, already integrated extensions. Now, Google's coming from an even more different angle, so they've always been on the bleeding edge of innovation. Google has attracted a lot of world-class developers and ISVs who require massive scale, continuous service launches and updates, and who also want to leverage the Google brand. To date, Google App Engine has been largely utilized by SMBs and developers targeting the SMB and consumer market, but as they add integrations and add more capabilities, and it'll be really interesting when they start to add more analytics capabilities into their platform, we think they'll start attracting more enterprise developers. And lastly, AWS. So they're not pictured here because they don't charge for their platform, but it is interesting to call out that it's a totally different model. They provide the building blocks for free, the platform for free, and developers can develop on that platform and be charged just for the infrastructure usage. Now, this drives increased app development and testing because, again, it's essentially free, but they're mostly targeting the more hardcore developers. So they're attracting a completely different audience than a Salesforce.com would attract. The next group of vendors, they're all clustered towards that y-axis, and we think some of the big vendors that will succeed and pass here are IBM, Pivotal, and HP. They have open source development platforms. They've thrown a lot of investment at it. It's fully integrated with their broader cloud suites. We think enterprise developers, will be attracted to those platforms. A lot of the pure play PaaS companies like CloudBees and EngineYard, I think that their acquisition targets for the bigger vendors who are looking to build out their own developer ecosystems who might not have them so far. So I'm thinking of Verizon, AT&T, just that group of group of vendors who is a bit late to market in developing their ecosystem, but will definitely benefit from applications on top of their infrastructure.
Okay, great. Now, so one of the overall trends that we're tracking with Platform as a Services, obviously on the previous slide, there's a ton of companies there, most of which did not play a large role in terms of traditional IT and application development. Cloud is that new opportunity to be able to host those platforms and deliver some of the benefits which we've laid out here in terms of the routes to monetization, the benefits in terms of go-to-market, because it's not just a technology and an investment benefit that we see for offering PaaS. It's one that fundamentally changes the go-to-market for monetizing cloud services and doing it in a more scalable way. If you start at the top, when we look at a lot of the successful vendors so far in public cloud have taken a very direct-to-customer approach that emulated a lot of the traditional IT sales methods. If you look at Salesforce.com, really feet on the street, direct sales, that's driven a lot of their growth to be one of the largest cloud vendors. With this shift to a development ecosystem, it brings a lot of benefits in terms of that sales model. Instead of having to fight and seek out each and every lead with your own resources, it enables a set of partners to come in and customize what largely are horizontal cloud platforms and capabilities, make them more relevant in terms of different customer verticals, different geographies, different sizes of target customers, really add that next layer of value, which we definitely see in terms of our interactions with customers that going beyond the off-the-shelf horizontal capabilities of cloud that deliver cost savings, but in some ways are not custom fit for the use case and the individual customer, is largely an unmet need in the market today. And that as customers come in and solve that problem of the last mile of customization, creates a tremendous amount of efficiency for the vendors that are providing those cloud solutions. So it fundamentally augments the continued direct sales efforts with an ecosystem one that brings a lot of benefits that you don't see with direct sales in terms of scalability, profitability. If you look at being able to shift a lot of the sales and marketing effort and expense to a partner network, all of a sudden the financials for cloud services start to look a lot better when you're not spending 50 cents of every dollar that comes in on maintaining awareness and generating consistent revenue growth. So those are the reasons that if you rewind to the previous slide, there's so much focus and activity around this because there's lower barriers to entry with cloud, and the benefits in terms of the back-end monetization are truly powerful in terms of the go-to-market technique and the model there. The other thing that we believe drives so much of the activity here is the issue of scarcity, that with so many platforms in the market, most of which are vendors that did not participate in terms of the traditional app development space, there's simply not enough quality developers and ISVs out there to support that diversity of the ecosystem going forward, that they're going to be faced with making choices and trade-offs and have to standardize on one platform, maybe two is our hypothesis, but they're not going to be using and sampling a variety of different platforms. And so the time is now, and the urgency is there to ensure that they're top of mind, that as these developers make their decision, which is going to be a long-term decision in terms of the development environment and the platform to use for their business over the next 5+ years, that urgency is there. And so you're seeing that in terms of the vendors that are participating in this space, the pace of innovation, the addition of app stores, the support for containers and open standards, a lot of activity there, because of this issue of scarcity, we believe is something that is going to drive an increased sense of urgency going forward. So here's an example of when we look at some of these platforms, what are, the strengths for Microsoft, what are the weaknesses for Microsoft, because certainly we've seen tremendous, they were fairly early on in this space, they've evolved it quite a bit. One of the things that we believe was a tipping point in their, kind of ensuring that they're going to be a viable player over the long term, that it's not something where you're going to see them decrease in terms of the presence and the power of the Azure platform. Here was the addition of the infrastructure as a service capabilities a little bit more than a year ago. Because that's the type of model that when we interact with developers, that they're really looking for. It's not just a technology platform to develop and test. It truly is one that needs to support them throughout the life cycle of monetizing these services and supporting these services as they move into production once the development cycle is complete. And so a lot of their strengths there, really heavy in terms of when we think about developers, there's obviously within enterprises developing for either customer-facing or internal-facing applications, but also the ISV community. So they've seen more strength so far in terms of that enterprise developer. Obviously, the power of their .NET platform is something that they're leveraging, as well as the middleware technology, which they've grown to be quite a strong business over the past 10 years, as well as in terms of the strength as the market gets more into a hybrid-type consumption model, that their ability to meld on-prem to public cloud to a private environment with the Hyper-V and the management technologies all plays to their benefit in terms of the attractiveness of that platform, but really one of the big things being the ability to support deployment throughout the life cycle, at least from a technology point of view. Because one of the weaknesses we do see for them is leaving space for partners, obviously part of their strategy, but the lack of a cohesive business support story that extends beyond just the technology benefits into building the financial implications for their ISV partners of shifting to from a traditional to a cloud model. More to be done, more to build up in terms of the support network around the Azure platform to get more of the use cases that really drive the awareness and drive the end-to-end benefits of development right through production and monetization for the customers that are investing as part of their ecosystem. So with that, I'll hand it back over to Jill and finish up with infrastructure.
Thanks, Alan. This is the graph from the 2Q report again, so depicting 2Q public cloud revenue growth, absolute dollar growth, and size of the bubble. At the size of the bubble is the volume of revenue. Let's get to the overall public cloud infrastructure as a service market view. It really shows that just the sheer dominance that AWS has currently in the market. They do over $1 billion a quarter, where the vast majority of vendors, so that most of them in that cluster in the bottom left, do under $50 million. Now that will change over the next 4 or 5 years, but right now it's maturing and evolving, and the players will look quite different, we think, over the next few years. Other players, aside from AWS, that are dominant are IBM, Fujitsu, Rackspace, Verizon, and AT&T. So these are vendors who have the infrastructure and backbone to offer public cloud. IBM acquired SoftLayer to do so, and they've been doing quite well in the market. Fujitsu has had a head start in the global economy outside the U.S., while most of the other players are largely focused in the North American market. So what I really wanted to focus on here is the changes that will happen over the next couple of years. So this slide is looking at 4 vendors: Amazon, IBM, Google, and Microsoft. And I think these 4 vendors will really dominate the North American market and to a large extent the global market for infrastructure as a service. They were somewhat early to market or acquired their way in. They're building out data centers, investing in infrastructure as a service, improving services, and really escalating the marketing around their free services and free tier, really to grab as many customers and get themselves inside of as many environments as possible, even at a free tier. Now, the vendors on the right, I've listed a few: Rackspace, Verizon, HP, Dell. These vendors, they had the infrastructure to quickly get into public cloud when the cloud market began to grow so quickly, but they've since shifted their focus away from public cloud and towards managed cloud, private cloud, and hybrid IT. We think that this is a smart move for them. You know, we've been saying for a few years, no one really should or wants to compete with AWS. I think Google and Microsoft have the best chances there for a number of different reasons. But the HP, Dell, Verizon, Rackspace, we think that they're not going to shut off public cloud by any means, but will start to work with the vendors on the left more. It's about customer choice, integration. HP, you know, a great spot for them is to manage the IT environment and relationship with the client, offer HP private cloud integration, and say if a customer wants Amazon or has Amazon as their public cloud offering, you know, that's fine. They can work with HP and also get Amazon, and it's just more of a co-opetition than going head-to-head. There's the inclusion of Amazon and Microsoft into the AT&T NetBond program and Verizon Secure Cloud Interconnect program, both in September. That goes to show that both groups of vendors are much more willing than they have been in the past to work together. So for Amazon, you could argue the opposite point from the vendors on the right. AWS, they're a cloud vendor. They do offer their own flavor of managed private cloud, but they are so far in the public cloud view that we think they're having a little trouble getting into hybrid. Our studies have shown that you know, Google and Microsoft are much more integrated into IT environments right now than Amazon. So it's a perfect opportunity for Amazon to work with Verizon and AT&T and to leverage their private IP to connect to on-premise data centers and to connect to these vendors' private clouds. This gives Amazon a seat at the table in hybrid, and also gives AT&T and Verizon access to the AWS customer base. The other thing I think that's happening is the vendors were becoming spread way too thin. So a lot of vendors built offerings in every single cloud area and didn't really have a focus. They knew they wanted to get into cloud. They knew cloud was a growth area. They knew they had the resources, but I think they were just spread out a little bit too thin. So now vendors are going back to their core strengths to really drive revenue in new and better for them ways in the cloud market. Again, except I think IBM, they are all things to all people. They do have a presence in all cloud markets, but I think it works for them just based on their constant evolution as a company. And with that wraps up our presentations, and we are open for questions.
Great. So we've had several questions come through. For those of you who have questions now, please send them through at this time. Excuse me. The first question we have is, when it comes to IBM internal processes, operations, and culture, to what extent do you think IBM is being successful in the transition to an as-a-service model?
Yeah. So I certainly think it's I think they've had pockets of success, and that by with the number of acquisitions that have been made and the types of organizations that have been built around them, as well as the segmentation of one of the things that IBM is proficient at is to segment certain portions of the organization in order to incent each of them to, in some ways, compete and work against each other. And so when we look at cloud being positioned within the services organization, separate from the infrastructure groups, one of the growth highlights in a overall landscape for IBM that's been a difficult one over the past year in terms of the traditional areas of technology, that they have been successful at that, at that segregated approach to capitalizing on cloud. So I think while if you look externally, a lot of the marketing is focused on promoting the cloud, changing the customer perception of when they think of IBM, connecting it to the cloud services, not just the machines and the physical offerings that have been the mainstay of IBM's portfolio for decades. So I think there is a lag in terms of that internal shift in terms of truly not just taking a separated approach to monetizing cloud, but truly integrating it more cohesively into the overall organization and the internal structure. Still a ways to go, but I think it's an evolution. It's with a lot of the vendors that are becoming increasingly cloud focused. If you look at Oracle, SAP, they're going through the same transition, perhaps even behind where IBM is in terms of making that shift. So, given their size, I think you can only say that Microsoft perhaps has been more advanced in terms of making that shift, given the landscape for the largest of the large IT providers moving from a traditional to a cloud model.
Okay, another question we have is, where do you see OpenStack figuring into these changes in the cloud market?
I see OpenStack as much more of a tool in the private cloud space. It hasn't affected the public cloud space too much yet. A lot of the public cloud vendors are opening their APIs and they are very open. So developers have been developing on them and increasing integration. But where we see OpenStack really is more on the private cloud side, helping to build that out. I think eventually it will bleed over into the public cloud space, so people can move applications more easily and integrate them more easily. So I guess a TBD for public cloud, but definitely a driver in private cloud.
Okay, we actually have a couple questions that just came under in chat. Simple ones. First of all, what does the size of the bubbles on the chart represent? You guys want to address that real quick?
Sure, that's the volume of revenue in the quarter. So the one we're looking at right now, that's the volume of public cloud infrastructure as a service revenue just in Q14.
Okay. All right, so another question we have is, on the platform as a service partnering approach, you depicted Salesforce and IBM rather focused on direct sales and not on development ecosystem partnering. That seems counterintuitive. If you look at many of the ISVs that are advertising their Force.com apps on AppExchange. Likewise, IBM is known for a strong partnering approach usually. Can you elaborate, where do you see the difference in the development ecosystem between the two groups in more detail?
Sure. The Salesforce.com applications group and platform group, they run very differently. So if it's a Salesforce application, Sales Cloud, Marketing Cloud, Services Cloud, any of those applications, those are sold direct 99% of the time. Salesforce has a lot of partners around those applications, but when it comes to actual sales, except for in Russia where they need to use a Russian partner, and for some of the acquisitions, where they don't have the knowledge built up yet, and the companies they acquired have strong sales channels, it's direct. Now, for the platform side, they are selling the platform directly to their partners, but when the partners build the applications, they can have a lot of advertising and marketing on the site, and that is more of a partnership than the applications.
Next question we have is, how do you assess EMC's market presence in the hybrid cloud space, partnering with VMware's vCloud Air Public offering?
Yeah. So, the way that we look at the vendors that are included here is we do look at VMware separately. We do look at, in the platform as a service space, we look at Pivotal separately. So we do call out the differences in terms of the EMC federated versus the individual companies that are included in the benchmark.
All right. The next question. Industry leaders have been making announcements of cloud acquisitions and hybrid cloud. Excuse me. EMC made a statement on hybrid cloud and what a well-run hybrid cloud should consist of. Do you have any thoughts on that announcement?
I mean, I think certainly, I mean, this is the example of where EMC has been moving to not just rely on VMware and Pivotal and VCE, this collection of brands that they've put together around technologies that address cloud issues. I think what you're seeing just over the past couple of months, and they had a hybrid cloud solution announcement very recently, and then the more recent acquisitions, is them, acknowledging that as a brand, they have a lot to provide in terms of the pan-EMC collection of assets. And with these acquisitions and shift in terms of the marketing and the packaging to make EMC federated more connected to the cloud assets that it does provide, and having more direct ownership of the cloud management capabilities. So certainly, I think based on the recent events, you're going to continue to see them more heavily promote not just the sub-brands, but the overall EMC brand as delivering value around hybrid cloud management going forward.
Okay, and actually, to the person that asked that question, if you'd like to follow up this, one of our other principal analysts, Jeff Wollicott, was at the EMC event and got a full briefing on that. So if you'd like to go into more detail on that, we can arrange a conversation for you on that topic. So another question we have is, how will all these changes in the cloud market affect cloud infrastructure hardware vendors?
So we do look at, so obviously, I think for cloud infrastructure hardware vendors, the good news is that we see the market moving beyond the initial, lowest cost, fully commoditized type infrastructure that a vendor like AWS has really grown and built its base on. If you look at where a lot of the public cloud consumption, we believe, is going to be going, it's going to be around hybrid environments where performance is more important than it is for the purely siloed use of public cloud services. It's going into increasingly vertical aware type applications and use cases, again, where infrastructure matters more than it does for the early use cases and the current volume of activity. So I think for the hardware providers, that's good news in that there will be more room for differentiation and value for the underlying infrastructure than there has been in the past. And so I think that that's how we see the impact of these trends flowing down into the server and the other infrastructure and hardware provider markets.
Okay. So we're rapidly running out of time, so there's one more question I want to talk about. Just came through. Do you have any other reading on the attractiveness of the ISV partner programs across the various platform as a service players? What are the key ingredients for a great program from your point of view?
So in terms of the programs that we look at, you know, I think a lot of the programs that kind of stand out have both, you know, are not focused on, it's all about the intent. So when we look at the goals and the objectives for a lot of the programs, it varies from, you know, attracting an ecosystem to drive monetization of the underlying platforms that the vendor provides, to protecting existing services and products by building out an ecosystem around them and kind of locking in around an offering that the vendor provides. So I think the long-term winners that we believe are going to be ones that enable more of an open development environment, and that includes deployment. We've seen more focus around containers, building those capabilities into the development environment so that there's more flexibility in terms of the post-production deployment. Obviously, there's downsides in terms of the capabilities to move from different environments on-prem, different cloud environments. But I think ultimately the ones that are earlier on to enable that type of free choice in terms of the deployment, you know, will be ones that are kind of ahead of where a lot of the early instances of platforms have been in terms of the capabilities that are provided in that regard.
All right. And I wouldn't be a very good marketing director if I didn't encourage my analysts right now to talk about, based on that question, if you guys want to talk just a minute about the cloud developer study that you guys are working on right now. I think that probably is pretty applicable to this topic.
Yeah.
A brief overview.
Absolutely. So one of the things that we're looking at is combining the platform view, which we cover with this benchmark. We've done a lot of research around the capabilities and kind of deeply understanding what the offer is from the vendor side. We're complementing that by going right out to the developer base, looking at both enterprises as well as ISVs in terms of their perception of the current offerings from vendors, how many they're trialing, how they're making commitments to one platform over another, and you know, what are the important technical benefits as well as the business benefits that can help differentiate and influence their decision for which platforms to standardize on. So I think it's, you know, good timing in terms of this issue of scarcity coming up. We'll be gauging that with the study, but also helping inform for the providers in this space how best to position their platform and the capabilities that will help them be more successful in terms of garnering that ecosystem commitment and investment that, you know, so many platforms are looking for and really need to be viable over the long term.
So if anyone's interested in getting more information on that study, or we have the Innovator Disruptor program where we're profiling the small innovative cloud companies that are coming up and really upsetting the larger, we'll call it cloud traditional models. We also have that as well. So if you have any more questions about our cloud portfolio, please feel free to reach out to any one of us. As I mentioned at the beginning of the session, I'm going to share all the social media links with you. So a couple people have asked about the slides. We are going to send out the slides out to everyone who was here in attendance today, but there are also the back slides from all of the webinars we do every quarter. So if you'd like to get more information around those, please visit our SlideShare page at the URL listed here, and you can join the conversations on YouTube. You can watch all the old recordings and join our user communities on LinkedIn, where we're putting up a lot more information around our research and infographics, along with our Twitter handles. We need to put in, we have a cloud-specific Twitter handle, TBR Cloud, so if you'd like to follow that cloud handle, that's all cloud all the time, 24/7. And so Jill is really working hard to populate that. For those of you who asked questions that we did not get to today, we will be following up with you either through your sales rep to set up a call or with direct responses from the analysts, so please do stay tuned for those. On your way out of the session, as always, I'm sure many of you guys have been here before, short survey. We do appreciate your feedback on the quality of the webinar, what we can be doing better, and your time is very valuable. So please give us any feedback you think will help us make these presentations a better use of your time. So with that, I'm going to leave the chat function open another minute or two in case there's any last-minute questions or comments or requests to have a conversation with Jill and Alan. And if we don't hear from you now, please be on the lookout for more webinars coming in 2015. And if you have any, I know, right, 2015. Happy Halloween, everyone. So keep an eye out for the upcoming webinars, and we look forward to continuing to work with you into the new year. Thanks, everyone. Have a great afternoon.